Welcome back. Siemens India lit up the earnings season with a hefty 40% growth in its profit and a 28% growth in revenues. But Siemens is more important to India's growth story, not just for earnings, especially after the company bagged a 26,000 crore rupee order for locomotives from Indian Railways just a couple of months back in January. Joining me to discuss the Indian Capex cycle, the India growth story, and of course their own company performance is Sunil Mathur, CEO and Managing Director, Siemens India. Mr. Mathur, thank you very much indeed for joining and coming over to our studio.
Thank you for having me, Lata.
Well, first up, this is the question, excellent Q2 numbers. For you, it is Q2. The 40% and 28% growth in revenues. Before I come to the big railways and power story, is this a maintainable pace?
I would like to hope so. Our growth has always been linked to the growth in the economy. And we are very closely tied to the growth in infrastructure, to the growth in industry. And as these sectors start moving, that reflects in our numbers as well. So I would like to hope so. Certainly, the performance in the last 2 years has been positive. And that reflects also with the India story, where infrastructure and industry growth has actually taken place.
Yeah, so, I don't know to what extent you're willing to give a guidance at all, but considering that raw material prices are smoothening and the Capex is not going away anytime soon, certainly not by September when the year ends, this good going may continue?
So yes, I think the growth in the numbers definitely looks good. We have good visibility. Orders continue to come in. In the country, Capex utilization is at about 75%, which is a good sign. Infrastructure growth is taking place, which is a good sign. So our visibility for the next 3 to 6 months is good. So I'm hopeful about that. You're absolutely right. Commodity prices are beginning to ease a little bit. How much of that will really translate into reality on the ground, we will have to see.
So specifically, your margins at 12.5%, 13%, is that maintainable?
Over the long period, probably not, to be honest.
Okay.
And a lot of it depends on how the forex movements go. A lot of it depends on what happens to commodity and oil prices and so on. But the underlying profitability is robust. It will also depend on the mix that we have going down the line. How much of it is product, short cycle, versus project, which is a slightly longer cycle, and so on. So I think it's difficult for me to say where we will be. We are a business that sells everything from switches and sockets right up to trains. And a lot of it depends on the mix.
Okay. Well, let me come to the big, news story, the January order that you all won, 26,000 crore. How does that come into revenues? If we have to project your revenues over, I think it's a 5-year order?
10-year.
10-year order. Okay. So is it front-loaded? Will railways pay you earlier? How does it get accounted for in revenues?
So there is a table of deliveries, and this is a delivery of a locomotive, and it starts with 5 and goes to 10 and then so on. So every year it's a ramp up in the number of locomotives that have to be delivered over a 10-year period. Towards the back end of that, the volumes increase. Okay. And then there's a 35-year period of maintenance that happens beyond that. So the revenues will flow accordingly. This is not a project, it's a product. So
yeah, so that's why in your mix of project and product, this would be higher margin by your definition?
I would probably put it mid-margins. Mid-margins.
All right. Well, Vande Bharat, that was something which aroused our curiosity. We didn't see you in the fray. So that was, of course, one set of orders only. Do we see you more active in, because I think there are many more Vande Bharat orders.
Absolutely. So we are very clearly focused on our mobility business. Particularly, we are already present in in the electrification and rolling stock business and signaling business, and now we get into the rolling stock. So the locomotive was the first example. There are more locomotive jobs coming out. Train sets, Vande Bharat, that is another one. Metros will also be a good opportunity. So we will definitely get in. As with all tenders, we choose which ones to bid for. We choose where we believe there is an opportunity to win. We have to manage the resources, and we will take those bets, but we are very clearly here to participate in this, in the railway story and the metro story.
The skepticism was that you had this huge order. So did you pass up the Vande Bharat opportunity because your bandwidth was already full, or will you still be, expanding?
We are hungry for more and more and more.
Right. Okay. Railways is very clear. It's with the central government. Central government has the money and the will into Capex. Let's come to power, where you're really present across the chain. Are you seeing that, fruitful or that bountiful an order pipeline?
So power is a long chain. Yeah, it starts from the generation side, and we are not in renewables as Siemens Limited. This is the role that Siemens Gamesa plays in terms of renewable generation, wind. But we are in steam turbines. We do steam turbines. We also do waste heat recovery, and this is picking up terrifically. Yes. Particularly from the sustainability angle and efficiency angles there. We're also in the transmission segment, and that is picking up. We are seeing a lot of traction, particularly on the TBCB project, so the tariff-based competitive bidding. There's a lot happening over there. The MNRE has announced that they want to do 50 gigawatts, yes. And there have been announcements following that from NTPC and the others as well, about 15 gigawatts of further announcements coming from them. So I think there will be traction happening on the transmission side. As you get more into renewables, the grid gets unstable, and we will need technologies to stabilize the grid. So that is coming as well. So we do see a lot of traction happening there.
The question for a lay investor for anyone in the power space is, do you get paid on time? Because it's so much even a state government sector, and we know the DISCOMs have had a record of not being on time in their payments. Is that something that will bother you, or are you not getting your payments from DISCOMs, but perhaps other?
So payments are paramount to us. Of yes. course, money matters.
But are you working for the DISCOMs?
It is not a critical factor.
Okay.
It is not a critical concern that we have currently. Our payments are coming on time. But again, we are not directly exposed to the DISCOM.
Yes, that's what I mean.
And we are bidding to EPC players. We are not very active in EPC. Some we do, but we are not very active in EPC. And from the EPC players, we are getting paid on time.
All right. Okay, so at least being in the power space and not being exposed to DISCOMs becomes a
yes.
bit of an advantage.
Absolutely.
What about non-government Capex? How much of your order book is from non-government, and what may it be, say, a year down the line?
So I'd say roughly 60% is non-government, 50 to 60% is non-government, and we try to balance that
This is not counting 26,000 crore?
No. This is the 26,000 is separate.
Okay.
But 50 to 60% is non-government, and this is more the industrial part of it, which covers everything from food and beverages, pharmaceuticals, data centers, intralogistics, warehousing, cement, steel, and those are large segments. So we do see traction happening there, some faster than others and some not too much at all. But there is a major demand for medium voltage, low voltage products on the electrification side, automation on the other side, and digital solutions on the third side. So across the board, we are able to see traction happening there.
Okay. You've been a veteran of the Indian infrastructure skies, if you please. Where do you see this Capex cycle? Are we, a distance before we really pick up scale, or are we almost there? in terms of private sector capex momentum?
Private sector, we are not there yet. I would say we are moving in the right direction. And so, as I said, some sectors are doing better than others. Is the real boom there? No, not yet. Will it come? I'm confident it will.
Okay.
I do believe in the next year or so it will pick up. But we are not at the high level yet that we can be.
Okay, absolutely. Just a final question. You said that we are not yet there in the capex cycle. How much would you give it? Do you see it in a year, couple of years, 3 years?
So let me split this down. I think the central government is doing extremely well on capex spending in infrastructure. There's a lot happening there. And I think the story of the last 2 years and this year is moving well. So I would say we are well on track as far as central government spending is concerned. State government spending, we haven't yet taken off. Okay. And I think that may be a year or two down the line, but there's a huge upside potential over there. Some are spending more than others, but on an average, I don't think it's picked up to its real potential yet. Private sector, I think, will pick up in about a year's time, would be my expectation. They're waiting. We've just reached 75% capacity utilizations. My belief is if we can continue the momentum of the last 2 years and this year for another 2 or 3 years, inertia will kick in and then we are ready for takeoff.
Okay, and then we move on our own momentum.
Absolutely.
Waiting for that. Mr. Mathur, pleasure speaking with you. Thank you very much for joining us, coming to our studio, and for an interesting chat.
Thank you very much.
All right, that's it on this edition of Corporate Radar. We have to take a break after Bazaar. Chartbusters up next.